Our next guest says that the BOE faces one of the trickiest sets of policy challenges they have. And separately, he criticized Powell's hawkish pause decision last week. I want to bring in Mohamed El-Erian. He is the chief economic advisor at Allianz and the president of Queen's College at Cambridge University. Mohamed, specifically, your problem with Powell's not his testimony last week, his what he had to say to the markets last week. What did you not like?
So I called it confused and confusing. Confused because they said three things that are internally inconsistent. On the one hand, they increased the inflation forecast. They also increased the amount of hikes that they're anticipating. But on the other hand, they did not hike. So that was an inconsistent set of outcomes. Confusing, just look at the reactions in the marketplace. You have those who believe that this was a committee outcome. So it is what a committee would come out when the chair is trying to please everybody, and you end up in the muddled middle. There are those who think that they are signaling a higher inflation target, and there are those who think that they are making a mistake. And you saw the divergence in the performance of the equity market and the bond market because of that. So it is confusing and confused, and we're going to have to wait and see what happens next.
Is that maybe just a reflection that we're waiting to see on the data? If you look at some of the forward-looking stuff, it looks different than some of the backward-looking stuff, and we're a little confused ourselves about where things stand?
Well, that's the critical issue, is that if you are totally data dependent, which they are, then you end up with serially inconsistent outcomes because the data tends to be fluid. Data never gives you month to month a very clear direction on a consistent basis. So if you're overly data dependent, and you've heard me say over and over again, it is not clear what is the strategic anchoring of this Fed. It is not clear how it sees the economy. We know its framework is outdated, but they haven't replaced it. So, that is how you end up. The key issue, the equity market does not believe they're going to deliver two hikes. The equity market has interpreted last week as a pause, not a skip, a pause, because when push comes to shove, they believe that this Fed will be less hawkish than the bond market believes. And that's the big difference right now in the marketplace.
Mohamed, Goldman Sachs had a note over the weekend that suggested inflation in the United States is going to be much more stubborn than the markets are pricing in at this point. And as a result, they think the markets are too optimistic. Do you agree with that?
I think that people underestimate what happens to the inflation dynamic when it ends up in the service sector. So remember the transition. You've heard me say this, Becky. It starts with a few items. Then it gets embedded in the goods sector. And then next thing you know, it jumps to services. And there, inflation becomes less sensitive to interest rate increases and therefore more embedded. The good news is we also got, like you said earlier, the CPI print and service inflation moderated. But I think there's a general recognition that inflation will be higher for longer. Where there is no discussion as yet is, will it be stable higher or variable higher? And that's something that I suspect a lot of people, including me, are going to start paying attention to, because that has very different implications for what happens to the real economy.
What happens if it's variably higher? What do you mean? It spikes, comes down, spikes, comes down?
Right. So what you don't want is variably higher. If it's higher and more stable, then we can continue, the markets can do well, the economy can navigate through that. If it's higher and variable, then that will confuse signals and cause headwinds for both the economy and markets. My basic view, and I know that there isn't much willingness to even discuss it in the central banking world, is our 2% inflation target is too low. We're now living in a world of supply constraints. And if we were to formulate a new inflation target, it would be higher than 2%. It would be more like 3%.